Good morning. It's Wednesday, May 24th, and I was just goofing around with everybody, and I've spent a while on YouTube these past couple of mornings because I got the time, but it's a nice day out today. I want to get outside, so I'm going to make my way through this. We got some really good stocks today, but I want to start off with 50% off TrendSpider Memorial Day sale. You can use my code DSP25, but honestly, use the 50% off code in order to get my algorithms, my watch lists, and my scans. You just have to sign up, send me your email address, communicate with me. Down below, there is a link tree, and the link tree includes an email address. It includes a Facebook private group that you can message me in. It includes Instagram where you can message me. It includes Twitter where you can message me, and any way that you can get in contact with me, whether it's a comment on YouTube with your email address, whatever you want to do. But it does get you an additional 50% off today through, I think, Monday. Check trendspider.com. It is 50% off. I talk about the Black Friday sale all the time. This is the next best thing next to Black Friday. You're getting it in May. So between now and November, you could use it. Make sure, again, it's just under $400 at 50% off. You need the elite level in order to get my algorithm. The lower level than that, it's the mid level that you really need. The higher level, I don't think that you need it. But the lower level doesn't get you the back testing or the strategy tester. So you really, really want that middle elite level. And again, it's just under $400. Now, if you're trading on a $1,000 account, say you have $2,500, even $5,000, do not spend $400 on TrendSpider. Use free tools out there, like sign up for Fidelity and get Active Trader Pro. Use TradingView to understand moving averages and things of that sort. TradingView, the free version, you can absolutely chart with that. If you're on Robinhood doesn't do crap for you. Fidelity is a far better broker. Transfer your money over. If you got $2,500 in your account, I can get you a $100 bonus. Just email me with your account email that you use. I'll send it over, and my guy Stuart sends you a $100 gift card over at Fidelity. There's no link or anything like that. Just send me a message. But again, 50% off TrendSpider. And I had this talk with a subscriber last night. $400 is a lot of money for the majority of people. For me, it was a lot of money to spend when I first started using TrendSpider. In order to develop my strategy, the 4-hour algorithm, and David showed me the 65-minute algorithm that I need to, it's on YouTube. And I can point out that video. I'm going to make a playlist of just TrendSpider videos. Also, I'll make a playlist of all the daily stuff. But when I understood the strategy, what it does, there's two things that TrendSpider allows me to do. It allows me to take a look at the long-term trend of a stock. It allows me to look at insider information. It allows me to look at strange, unusual options activity. It allows me to use the seasonality. It allows me to look at the MACD. There are so many deep things that you can do in TrendSpider. But the main thing that my algorithm allowed me to do is take emotion out of trade. So we've all been there. You stay in a trade way too long. Oh my God, it's going to get back. Oh my God, it's going to get back. The algorithm allows you to look at, you know what? The algorithm says to get out, so I'm going to blame the algorithm. It takes emotion out of the trade. So 50% off. Again, the link is down below. Go to that link. I'll make sure that your email address is just on my chart, on my account, blah, blah, blah. It's so easy. And I'll get you set up. I developed a welcome letter that I can just email out to you as a PDF. And it's got my face on it. So it's super, super nice. Today is NVDA Earnings Day. But let's talk about SPY, where we're at. Look at that button hook right there. And I'm going to zoom in on this one so you can see. That button hook right there, and by the way, it is 935. So this is the current candle, and we're in the red. So we've opened down. It hasn't created a gap, but we did open down. My guess is that we don't gap. Right now, there is a gap between 413 and 414. It's not a huge gap. You do have this gap to fill between 408 and 407. My assumption is we fill that one on this way down. So I'm being very patient in my buys because SPY does have this cross down on the MACD. The RSI is trending down at 44, 49. It is in no man's land. So wouldn't surprise me if we get some type of news on the debt ceiling. This entire market is based on the debt ceiling. I've been saying this for days. These guys can't come to an agreement. They keep starting. They keep stopping. Next week is the absolute deadline. I would expect something to happen over this weekend. So until then, we're just stuck in this range. And we're going to go down based on news cycles. That's 100% of what it is. The Qs, same kind of thing. Whether you want to play SQQQ or TQQQ, right now SQQQ has been the winner. The other thing that's really winning is UVIXI. UVIXI, it tracks the VIX, which right now is up at 1975. Remember, we were trading with the VIX just 6 months ago at 30. It's gotten all the way down to 15. It is up 6%. UVIXI is up 4%. Doesn't track it exactly because it's based on futures and things. But the VIX is at 19. That could easily, with the debt ceiling getting closer, go up to 30. So be careful with that one. But you can see the Qs down here. They're getting the same kind of cross down. And the MACD's crossing down, same as SPY. It's all going to do the same kind of thing. Today is NVIDIA earnings day. And NVIDIA has pulled back to open. NVIDIA is down 1% at 302. My guidance for this, if it dips below 300, buy a little bit. Just buy a little bit. This is a $350 stock. If we go over to FinViz and we look at NVIDIA, and we look at some of the 52-week range, the 52-week range is between 108 and 318. If you got this at 108, high five, kudos. The PE is super, super high. I have been wrong about this PE. You should have bought it even though the PE was super, super high. This is basically the AI chip stock. You can buy AMD. AMD doesn't track as well. Here is a Seeking Alpha chart, which shows you NVIDIA versus XSD, which is a semiconductor ETF. It tracks SPY, and it tracks AMD. AMD year-to-date is up 68%. That's nothing to sneeze at. NVIDIA is up 114%. XSD only up 16%. SPY is up 8%. If I told you last year you could get SPY at 8% versus the 12% that it wound the year down, you'd be jumping for joy. NVIDIA at 114, you're perfectly happy. At 1 year, this gets a little bit more leveled off just year over year, but NVIDIA is still 79%. So it's crazy, crazy good. It's run up this amount. If we go back and we look at a weekly of NVIDIA, you can see the top here is about 350 back in the peak of November 2021. So you haven't quite made your way back. 350 is probably where you're going to at some point in time. Again, anything around that 200-day probably should have been an indication, hey, we're going to buy it. It has grown into its valuation. I think the over-under on the word artificial intelligence and AI is about 5,000 on this call. There's two dangers of NVIDIA. First, China. China banning any of their chips. You saw what had happened. This, I believe, in December of 2022 into this January. I think that dip was China saying, hey, or the U.S. saying you can't sell chips over to China. I forget which one it was, but it definitely was one where it took NVIDIA down. So you do have that kind of thing. China is famous for stealing intellectual property, so who knows exactly how they got around that. But NVIDIA created different chips that didn't include some of the national security stuff. So they were able to change it, and boom, they took off with AI. The other danger that you have with NVIDIA, that is short term. Here's where NVIDIA is going to drive this market. If we go to the home screen and we just on FinViz and we look at the S&P heat map over here, It's on the right. It's 15 minutes delayed, so it's still 4 minutes from actually getting it. We'll look at not 1 day performance, but we'll look at 1 week performance. And you go to NVIDIA, it's up 5% for 1 week. That big run, but the box is big. And while it's not as big as Apple, it's not as big as Microsoft, not as big as Google, it's about as big as Tesla, maybe slightly larger. NVIDIA could pull this market. If NVIDIA blows out their earnings, says that they have no inventory problems, and has just a legendary quarter, and the market either yawns or goes down, I think that's an indication that we've just oversold. And again, bounced on SPY. We bounced off that 420. We've hit that resistance level multiple times. We're up there. NVIDIA is one of the stocks that's basically bringing that and driving that up. So be a little bit careful with it, but I do think you're at 302 right now. If this dips under 300, your boy may just add to this one because I do think that it's a good one. When we talk about some of the tech that's leading the market, I took a look at FANG, and I basically charted FANG for year to date. And you got Meta just blowing everybody away, 97%. You got Google with second place, just beating Apple. 37, both are 37%. Amazon is 33%. Netflix is 20% year to date. Here's what you have to know about Netflix. Netflix is up 1% at the open today. You're seeing it kind of come down. You're still in this 322. You do have this gap between 340 and 345. I think at 350 is where you start to add Netflix. We had 300. I don't think you're seeing 300. Here's the reason. They started cracking down on passwords here in the U.S. They have said previously, one paying customer means 5 users, 5 households, not users, 5 households in the U.S. So to get one of those additional 4 users would mean an increase of 20% in subscriber base in the U.S. So it increases their subscribers and increases the revenue. So while you are getting a significant lower cost because of the writer strike, you're not going to have as great a content. You could have churn, but they are going after the households. So they're looking at trying to raise both the number of subscribers and the revenue. That could be a killer for this one. And because you take a look at this Seeking Alpha chart where they're all kind of in there, Netflix could be brought up. So I don't want to say, hey, 20% isn't like a great year-to-date gain. And I do think that you're seeing this rising wedge and you've broken out above it. I think 350 is the support level. So I think adding this one at 360, I may just add a little bit because I do think when you take a look at this weekly, take a look at this because we're about halfway back to where we were in November 2021. That's a $700 stock and you're trading at 361. Now, when you go to Netflix and you look at the average target price, I think it's around 361. So you're up at the average target price. You know, again, it's up at 360. I think anywhere around 350. I think you can add this one safely and just buy and hold. China, they've announced that they have a COVID wave happening. And they didn't really announce it. But they said, hey, we got a COVID wave. And they're kind of putting down some of the news reports about it. mRNA, don't pass up the fact that Stephen Bancel, the CEO, the hype master himself, who's selling, if I go and look at mRNA here, and we go and look, I think it's $6 million a day, $7 million a day. Yeah. $6 million a day. He's selling $6 million. And this has been going on for at least a year where he's been selling $6 to $8 million a day of stock. He is a hype master. He has taken every COVID opportunity to hype mRNA, Moderna. So don't expect this one to maybe come back to 160. It could be a play. Your boy at 52 years old, I'm past these plays. I'm giving you guys ideas. It's just something that I thought about. I thought it was worth mentioning. Apple yesterday. Your boy is long Apple. I have to say that, and then I have to squeal like a pig. Like I think it was Joe or somebody, I'd squeal like a pig when I said it. I am not squealing like a pig when I say it. But Apple, your boy is long. They announced a huge multi-billion-dollar chip deal with Broadcom yesterday. You're still in Apple. It's got that button hook. My guess is that it comes down here, fills these gaps all the way down to 157. I think at some point in time, we just get beaten down. Maybe it's the June quarter. Remember, June is seasonally the second worst month for Apple. You can see it down. Maybe you can see it. I don't know. But if you had TrendSpider, you could see the seasonality. Only 43% of the time over the last 42 years has Apple had a positive June. So 4 out of 10. Not great odds considering the rest of them are at least 50%. October is 71%. The only other month that's worse is September, which is 33% of the time. So, and that's where Apple kind of sells new iPhones and stuff like that. And when they sell new iPhones, hey, there's no real upgrade, blah, blah, blah. That's what happens. But they did announce that big deal. Let's talk about yesterday's earnings. I told you, get Pan W. Get it while it was under 200 to 204 right now. It's up 7%. It's cybersecurity, guys. Nobody's cutting back on cybersecurity. You do have this gap down here. I said get it at 180 yesterday. I thought it was going to pop. It's at 204. If you've got this one and you're in long term, I would start selling it around 200 every time it's broken 200. You've seen it pull back under 100, under 200. So I think you will have an opportunity to get this under 100 again. It's just basic math. I mean, honest to God, it just happens like this all the time. You can see up here, back in April of last year, over 200. You can see right here, August of last year, over 200. It's dipped down all the way to 135 back in January, and it's just been on this run. It will continue on this run. If you want to hold this one long term, absolutely hold it long term. They announced $1.10 per share. Look at that. $1.05. They're growing their earnings. So this one is a good name to hold on for a long time. Pac C, Pac W, which is a regional bank, Pac West, which has just been on a legendary run. Right now it's down 1% at 703, but this buy right here at 487 in the algorithm, I said it was risky. But they've been selling their business, and they've been doing a good job of trying to keep the deposit levels up by selling the business and their businesses in an open market. I think it's good. $4.87, you've near doubled. I mean, at this point, up at $8, I probably would have sold, close to doubling it. Probably would have taken some profits, knowing that it's coming back down just because deposits have it. It's crossed its 50-day. It's crossed the 50-day. It's nowhere near the 200-day. If these guys survive, it's going back to the 200-day at 16. If they survive, this is a gamble. This is 100% gambling on that one. But Pac W is running right there. UBS named Meta their top pick for the rest of the year with a $300 price point. I basically on YouTube just said for all iPhone users, go into your daily activity and your settings or your screen time. If one of your top 3 apps, if your top 2 apps are Facebook and Instagram, buy Meta. Just buy Meta. I mean, honest to God, if you're using it that much, there are other people that are using it that much too. I have people in my life who freaking post every 10 minutes on freaking Facebook still. Yeah, they're old. Those people are old. But UBS named it the top pick, $300 price point. If we go over here to FinViz and we look up Meta, I want to show you the long-term chart of Meta. The PE is only 16, forward PE of 16. Year to date, you're up 104%. They made income $22 billion. Cash on hand, $14.54. They can buy some AI. If you haven't tried their open source Llama large language model on AI, try it out. But let's take a look at the weekly, because this is what I want to show you. There is still a gap in the daily that goes up here to 325. So buying at 246, not horrible. But this is the weekly. You just crossed the 200. So if you bought down here, anywhere down here, kudos to you. Even if you bought at 200 way back here in May of 2022, maybe when I said, oh, it's a great opportunity, and you just held it. and you rode it all the way down to 85. Yeah, great. If you bought here at 85 and you timed this one, holy crap. High five, October 2022, the absolute lows. You can see from a weekly, we've got all the confirmation in the world. So I do think that you see 300 in this stock. You can get 25% from right there. So UBS named them their top surprise. Kohl's, KSS, they posted a surprise profit. They're up 10% to 21. This chart, I mean, just ignore the chart. It is down. They have no hope of actually surviving. I don't understand how they posted a profit, but they did. If we go over to FinViz, I think it's a 30% short that they have on this stock because they're near bankruptcy. Short interest, 19% short. So I was a little bit over, but it's huge short interest. Not only did they post a profit, if those shorts have to start buying their shorts, you could see it pop. So that's probably why you're seeing it pop 20 up to 21. I would say your tops on this one, if you bought it at 21 and you get to 25, you absolutely sell. If it covers that gap up here to 24.67, absolutely sell. I am not taking anything in this, but I wanted to bring it up. Abercrombie and Finch, ANF is the symbol. I haven't worn their clothes since I was 19 years old. I am a boomer. I had Abercrombie and Finch. Walking into that store today would give me allergy, just concerns just based on the amount of perfume that's in there. But ANF posted a huge, huge quarter. They're up 20%. This is a stock that could go back to 30. It's at 27. I would not buy this one on the hype, but if your kids wear Abercrombie and Finch, because let's be honest, if you're 40 years old and you're wearing Abercrombie and Finch, you're not listening to my podcast. You've got more problems than you probably need to have than gambling in the stock market. You probably have debt. You probably have some type of convertible. You're probably taking Hims for your hair. I mean, let's be honest. That's the person who is wearing Abercrombie and Finch over the age of 20. But you can see they've been downgraded. Their average target price is 26. Today you're trading at 28. Do not buy this one on the hype. I wanted to bring it up because AEO, this is American Eagle Outfitters that your boy got out of in December. And I was happy that I got out in December because I kind of sold at a little high. Even though I lost money, I sold at 14. This one is up 3% just on those Abercrombie. It's up fairly big. So Abercrombie is bringing up a bunch of things, even Urban Outfitters. URBN is up, 13%. They had earnings as well. So the consumer might be back. I mean, honest to God, maybe this is something to finally invest in Target. Maybe they get some type of thing. They're down 2% at 143. I think Target at 143, got it. I still walk through Target and I love Target. I still buy every time I go in there, I buy stuff. Shopify. This is on the Daily Stock Picks core portfolio. It's one that I constantly watch. It's back under 60. I think you could easily buy this at 60. There is this gap right here, that created on earnings between 47 and 52. I think anything in the 50s, I think you're fine. I think by the end of the year, this is a $70 stock. They're going to make money. It is just too good. They're basically the Amazon. And look at this. If you go to a weekly, it's $152 here and it's high. November 29th, this was too expensive. But they've cut their costs back significantly. They are making money. So they're back to profitability. Think of this as Amazon without the fulfillment. That's what this is. This is basically all third-party sellers who Shopify allows them to set up a store, a website. They sell everything. It's unbelievable. So I do think that it's a $70 stock. I think if you want to buy it at 57, I think you're good. I think my average purchase price on this one is somewhere in the 40s. It might be in the 50s. Either way, I'm just holding on. I wanted to take a look at Energy Transfer. Energy Transfer was one, if you go over to FinViz and you go to home, it's still the biggest weekly buy, insider buy. Warren Kelsey bought $12 million worth. of ET. I'm sorry, he bought $12 million worth on May 15th. On May 22nd, he bought an additional $10 million worth. So I wanted to take a look at that chart because I brought it up, I think, around 1250. Right here. This was May 15th when we first saw the buy. And I said, hey, around 1250, I don't think it's bad. You're at 1272 right now. So it's got the confirmation. You're seeing a bit of a button hook. I do think that this gap up here between 1325 and 1327, not a huge one. I think it gets filled at some point in time. I think he's playing for around $12. He's going to basically make sure that this stock stays at that level. If you go and look at Energy Transfer, PE is 9, not huge, not small for an energy company, but the dividend is 9.64. So while you're waiting for it to get to 13, if you go down to 12 from 1277, you're still getting paid 10%. Hold on to it for a year. That would be my thing. I just don't see energy being more beaten down than it already has. Energy is fine. So let's talk about scans. Some of the S&P 500, Amgen. Amgen is one. Is it beaten down? 224.42. Let's take a look at it from a fundamental standpoint. And I posted in the private Facebook group a great, Steve Burns wrote a great thing about fundamental versus technical trading and why you really want to do both. But look at this, 52-week range of energy, Amgen, 220 to 296. You're trading at 223. The target price is 255. Most recent, reiterated, Oppenheimer with a $290 price target. So Amgen, Insider Monkey, 14 best healthcare dividend stocks to buy. This is a 3.8% dividend. You're down 14%. Healthcare has just been a dog this year, an absolute dog. Amgen 224. Now the algorithm makes you 11% on Amgen. I repeat, it makes you over 2 years 11%. Buying and holding the stock over 2 years, you lost 6%. So your wins 29% of the time. So you don't win much. Your average win is 7%. So there were two communication stocks that had cross up. First one is Verizon, and I like Verizon. 3670 is the cross up. This one has not done well. It has been an absolute dog. The PE is not super high. It's 7. But this is a capital-intensive business, and cell phones are and even home internet. It's a race to the bottom. Who's paying more money? If there's again, if I can tell you, if you're paying more than $25 a month for your phone bill, switch to WEBULL. The link is down in the description below. Verizon is the network that owns WEBULL, and it's the network that you're on. I like Verizon. Here's the thing: 7.2% dividend. Hans, their CEO, has committed to that dividend. He has not decreased it. At some point in time, maybe he decreases it. 1 year, you've lost 27% on this. Performance year to date, you've lost 8%. It just hasn't made sense. Your average target price is 43. Your most recent upgrade. This is all at the end of 2022. Anywhere between $41 and $50. From an insider standpoint, it's all sales, and they're all selling around 38, 39, but you're trading at 35.94. I don't think it's a bad one, but again, realize that this one and T-Mobile is one that actually has been growing. They've kind of changed up their plans a little bit. They're offering significant discounts on phones, blah, blah, blah. The service is ranked high on, I think, Speed Test said that their service is ranked high. 147 to 149 is the gap. The price on the cross up, 141. This one on the algorithm versus Verizon or versus Amgen, this one actually, the algorithm loses you 17% versus buying and holding the actual stock makes you 0.44. So it doesn't perform as well. Your average win is only 3%. So that's why I say I think Verizon would be the better one to actually play. One that I just saw, I don't know too much about the company at all, but it seems like a good 5% move, is Exelon Corporation. EXC is the symbol. And the algorithm has you buying in at $40.11. It's trading at $40.30. But the 200-day is $41.95. I would say hold this one for 5%. If you want to hold on to it for a year, I don't think it's horrible. If you look at EXC on FinViz, the average target price, waiting for this one to just come up. I think it's ads that are, let's see. I don't want to upgrade my FinViz, but EXC, let's see. Did it come up yet? No, there it is. Average target price 46. So I don't think it's crazy to think that it gets back to 44. You are 15% above your 52-week high of 35. So 41 seems like it's right in the middle. Not a bad play. You get 3.56% dividend while you're waiting. KOLD. I was shocked that it looks like BOIL is going to rise today. KOLD had a cross up. I would not buy KOLD at $68. I would rather see you buy BOIL, even though BOIL doesn't have a cross up. And I think you're out of BOIL. Let me just look at BOIL. It is a triple levered ETF. You're seeing a button hook right here on BOIL. I'd rather see you buy BOIL to cover this gap between 335 and 373. At some point, I think it gets up there. I think it's BOIL is probably your play. It's just been beaten down way too much. If you want to buy something that actually makes money versus buying something in the futures like BOIL and KOLD, which are decaying assets, LNG, Cheniere Energy, 145. It's trading at 143. This is one that I think if you buy it and then we get into the war in Ukraine is still going on through the winter and Putin is still doing stuff with natural gas in Europe, I think you see natural gas go up, and I think these guys are the guys that benefit from it. I think you see it go back up to the 170s. And in the meantime, I think you get some pretty good dividend on this one too. Let's see. LNG. Man, FinViz is slow today for some reason. FinViz, 1% dividend on LNG. But PE is 4. Forward PE is 11. Forward PE worries me a little bit because it is a bit high. But I think it's, again, U.S. nat gas up 2% on forecasts of higher demand through early June. That's where you're seeing, natural gas go up. We talked about UVIXI. UVIXI tracks the VIX, which is trading right now at 20. I said it was going to go over 20. It was at 18. 2027 is where the VIX is at. UVIXI is up 5%. Cross up at 329, 350. I think you cover this gap at $3.90 to $4. I think you could trade this one. I think the VIX goes up. I think with the debt ceiling, I think volatility is here to stay. And I think you're going to 25 on that one. Just personal kind of thing. Another triple levered ETF, SDOW. This is short Dow. So this is assuming that the Dow continues to go down. This is up 2% today. This is a secondary cross up. I probably would not go into this one. The only reason this goes up is if we get more worries about the debt ceiling not being completed. That's just it. So SDOW, it's a triple levered ETF. Have your stop loss on this one because it's run from 25.70 up to 27.53. I think 29 would be if we get to June 1st and we don't have an agreement. I think that's when you're at 29. So make your bets now. In the crypto space, ETHE, Ethereum Trust, Grayscale Ethereum Trust, had a cross up. $8.28 was the cross up. You're trading at $8.11. It's down. I'm not crazy about this one. I would rather see you trade and do not own, but trade GBTC. GBTC had a cross up as well. And you trade this one because the difference in the price of Bitcoin and the price of GBTC is just too great. But $14.30, you're down at $13. I think when you get under the 200-day on this one, the 200-day is at $13.50. I think when you get under that, I think you can safely trade GBTC for a day trade. And, let's take a look at Mara. We talked about Mara a couple of days ago being under 10. It's at $8.95. Crypto's just getting a little bit crushed right now. Mara, I would wait for it to get under 850, and I think at 850, you're safe buying. Just wait for it to go to $10 at some point, because it will. It absolutely will. It's got no catalyst. The earnings are past. They lost 5 cents per share, which was pretty good considering the previous quarter they lost 14 cents per share. But Mara is just a trade. I don't think you buy it and hold it. I think you absolutely trade this one. So there are some ideas for you. I will talk with the people on YouTube for a little bit. If you're, remember, TrendSpider has started their Memorial Day sale, 50% off. If you have a trading account, or even an investment account or a retirement account that's worth more than $10,000 that you absolutely use to monitor, invest, whatever you do. And if you've ever had emotional trades in those things and you say, I want to take emotion out of the trade, get TrendSpider. It's 50% off, under $400. Everybody in that Facebook group who has gotten it raves about it. Everybody says, hey, it's life-changing as far as you're taking emotion out of the trade and making sure that you understand where a stock is going from a technical perspective. So, and when I go on vacation, you'll be able to look at this stuff because I'll give you access to everything. Next sponsor, Visible, $25 a month. You get $20 off with the link down below. So your first month is $5. I've said it before, get Visible. If you're paying $45 to T-Mobile, doesn't make sense to just try out Visible for $5 a month for the first month. Don't port your number over. Keep it. Just use the SIM when you're streaming YouTube on a train or in the back of an Uber or while you're traveling at an airport. Stream using Visible and, see what it's like. I absolutely love it. So if you have any questions, the links are all down below in the link tree. Remember, if you make money, treat me like a bartender. I'll lose you money at some point in time. But when you make money, throw a little my way. I love it. Gets my adrenaline pumping. So I will talk to you guys tomorrow. Tomorrow is Thursday. And hopefully let's hope that NVIDIA posts a decent enough quarter to pull this market back up. I'd like to continue the bull market. So take care. Talk to you tomorrow.